David and Geoff, thank you so much for joining us today. It's good to see you both. I want to provide a bit of a framework on where I want to take our discussion in the next few minutes. And David, with you, I want to discuss the latest news regarding construction and production at Phoenix. And Geoff, with you, I want to discuss the commercialization opportunities for Denison. And David, my first question is for you. You and your team have two key meetings coming up with government officials at the Canadian Nuclear Safety Commission. Tell us exactly when these meetings will be and what's the purpose of them.
Yeah, Jimmy, first of all, thanks very much for having us back on. We really enjoy this platform, and you're right. We do have some major developments coming up with permitting for our Phoenix project. It's been a long road to get here. Years of work on technical de-risking from our engineering operations team and also our regulatory team. And while the upcoming meetings are important, I always like to emphasize that we've been blessed with an excellent project, and that's what's allowed us to make so much headway over the last several years before the uranium market even improved. And just recently, we were recognized again by the Mining Journal as being the number one non-precious metals mine development project in the world. So a great accolade for us, and certainly helps our team through these years of regulatory approvals to remember why we're doing all of it. So to get to your question, look, we were very successful late last year, completing the final stages of the technical review of our environmental assessment with the Canadian Nuclear Safety Commission. And so in completing that, we essentially flipped the page on the regulatory process from one of reviewing the merits of the project and the environmental assessment analysis to one where the staff of the Canadian Nuclear Safety Commission are now prepared to recommend approval of the project. And that put us into this final stage of the federal approval process, which is a public hearing. Our dates for the public hearing, it's broken up into two parts, are scheduled in October of 2025 and December of 2025. And so these will be the first hearings for a new mine, a uranium mine by the CNSC in quite some time. And with that, we're now working towards finalizing the materials for the hearings. And essentially what people can expect is that Denison will be advocating the merits of the project. CNSC staff will be explaining all the rigorous analysis that they've done and their conclusions that support a recommendation for approval. And then the public will be able to intervene both on a positive and probably negative in some voices way on the project. And a panel of commission members from the Canadian Nuclear Safety Commission will hear all of this and then work to make a decision that is in the interest of Canadians.
And how long does each meeting last?
Well, we're expecting, a one-day meeting for that October, and then depending on the number of parties that have expressed an interest in interventions, the commission is allowed for several days for the second part, but it may not be several days. It'll depend on the number of contributors, and then from there, the commission will take time to review the materials before they render a decision.
And that decision is expected when?
Well, the commission has a service standard that they try to achieve. For a hearing like this, we're expecting a decision within about a 90-day period after. So that would put us into Q1 of 2026. And if we had a positive decision within that window, then we would be looking to make a final investment decision and commence construction as quickly as possible. So potentially construction commencing as early as Q1 2026.
So if construction starts in late Q1 or early Q2 of 26, when can we expect production?
Yeah, we have approximately a 2-year construction timeline on the project, and that's really notable. It's owing to our different mining method. So Phoenix is being brought forward as an in situ recovery mine, and so that means we don't have the mega sort of infrastructure efforts associated with like opening a pit or sinking a shaft. And so we're around 2 years construction timeline. CapEx, in that range of $400 to $500 million. Again, not a mega project. And so if we take that sort of schedule of Q1 or end of Q1 2026 for FID and construction commencement, add roughly 2 years, we're targeting mid 2028 for first production. And that likely positions us as the first new large-scale uranium mine in the region in approximately 20 years since Cigar Lake started up.
And when Phoenix is up and running, what will be the annual production?
Yeah, Phoenix has a 10-year mine life that averages around 6 million pounds a year. So not the largest mine in the industry, but certainly a meaningful one, top 10 territory. We will produce more pounds in the first 5 years than the average, and we'll produce a few pounds less than the average in the second 5 years. So something that looks more like 7 to 9 million pounds in the first half, and more like 3 to 5 million pounds in the second half.
Geoff, I want to turn the conversation to you now. The capex at Phoenix will be over $400 million. How will you fund this?
We have an incredibly strong balance sheet uh, consisting of cash, physical uranium, and investments. As of March 31, the physical uranium on balance sheet of 2.2 million pounds had a value of just over 200 million Canadian. But importantly, that was based on a $64.45 uranium price. So where we sit today, that's moved up materially. And so our balance sheets continue to strengthen. But importantly, as we think about bringing all the financing together, it's important what we don't have, and that's existing debt on the balance sheet. And David mentioned Phoenix as being an incredible project, but it has a number of important credit positives that lenders have really gravitated towards, that being the low cost, CapEx, OpEx, the short construction, and a rapid payback. So all of those really lend itself well to supporting credit. And we really view credit as providing the majority of the capital for the construction. So we're continuing to advance on work streams related to that. And then when we think about it holistically, we're not aware of another mine that's as well positioned or as well funded at a pre-permit stage in the uranium sector, certainly, and really across the entire mining spectrum. We think Denison and Phoenix really stand out.
And Geoff, the capex of 419 million, that came out from the feasibility study in 2023. We've had a little bit of inflation. Then do you expect an increase at all in that number?
Yeah, I mean, as we're going through our long lead procurement and advancing on detailed design and engineering, we're continuing to refine all parts of our capital plan. But importantly, it is a recent feasibility study, so we haven't seen a massive wave of inflation.
And another responsibility that falls under your job position is commercialization. Why don't you speak to some of the strategies that you and your team will employ in the coming months?
Yeah, thanks, Jimmy. We like to take a very much Denison-centric approach. We hear about homes for pounds or volume-based pricing, but we really take a asset-based and phased approach. And what that means, first and foremost, from a phased perspective, is project financing. I mentioned we have the physical uranium, 2.2 million pounds. We really view that as a core component of our project financing plan. So today we're prioritizing discussions with offtake partners and utilities where we can place our current physical uranium into long-term contracts during the construction period, such that we can monetize the physical along the same timelines that we're deploying capital for the build. Importantly as well, what's different about Denison from some other developers is we have our McLean North production starting up in 2025. So really the offering we have when we're interfacing with utilities is threefold: current inventory, McLean Lake product or McLean North production, and the flagship Phoenix production coming in 2028.
And Geoff, how will Denison's strategy for selling pounds be different from your competitors like NextGen or Cameco?
Yeah, thanks. We take an asset-based approach, recognizing that Phoenix is low cost, low capex. It really does afford it a greater degree of ability to handle market exposure in terms of pricing. And so certainly market-related contracts are something we're pursuing, but also recognizing the size we are in the market, where we're not going to be the largest contract in many books, but certainly still a meaningful contract. That allows us to add some layers of fixed prices in addition to the market-related contracts we have, and really with the focus on trying to identify what's most valuable to our customers and take that customer-centric approach.
And so because of your size or your smaller size compared to these other players, you're going to be a lot more flexible in terms of your pricing.
Well, we think we can be nimble and really take a customer view. We'll be, I think, large enough that we'll have a key role within contract books, but also not be a dominant position that require call it more rigidity in terms of contract structure.
David, another asset I want to discuss is the McLean Lake mine. Geoff did touch on this, but that's a JV you have with Orano. Orano is the operator, and it's set to go into production later in 2025. Can you give us an update on this?
Yeah, Jimmy, it's an incredibly exciting time for our McLean Lake joint venture. Been very well known for many years for operating the McLean Mill, which is processing all the ore from the Cigar Lake mine. But before it was doing that, McLean was a mining joint venture. And so we're back in mining this year. We will be producing in the second half of the year using our patented joint venture owned Sabre mining method. So this is surface access, borehole, resource extraction. Which means that we're mining without going underground, but we are excavating rock. And so the tool is able to excavate a cylindrical-like cavity from surface, pull up the cuttings, and then we're able to handle those and send them to the McLean mill for processing. And, this is a novel mining method, but it's one that we've tested successfully at a commercial scale at McLean Lake previously. And so we've got all the equipment on hand. There's very little CapEx to get this operation going because we have all the gear. It's just been about a year of mine development work and expecting to be producing later this year. And that should be meaningful for us. We do have 22.5% of the production that'll come to our account, and we'll be able to market that independently of Orano. And as Geoff says, be able to sell it to our customers.
So Denison, through the JV with Orano, will be the next uranium producer in the basin.
The next new mine is happening right now at McLean North. We like to advertise Phoenix as the next new large scale mine, just because it's so much more meaningful to global supply than we'd see out of McLean North.
And David, you have two primary assets. We already spoke about Phoenix, but your other one is Griffin. And I know a lot of your attention right now is focused on Phoenix just because it's much further along, much more advanced. But Griffin will also be very significant when it's up and running. Maybe you can just speak to the timeline associated with this, the construction and also the production of Griffin, and what will it mean in terms of production?
Yeah, Jimmy, you're absolutely right to look beyond Phoenix, and I can tell you that the management team we've had to start doing that because we know the timelines for these types of projects, and we are absolutely laser focused on executing on Phoenix. But as our teams have grown, we have teams that are skilled in different things, and so it has given us the capacity to start looking at the development pipeline. We are very careful around managing our capital for this. But if we want to have the cash flow from Phoenix fund the development of Griffin, then we do need to have Griffin in the queue. And so you'd see in our budget for this year, we do have some new spending at Griffin. The project is at a pre-feasibility study level, so it does require additional de-risking for us to be able to move forward and bring it to a feasibility study level, which would be the next technical de-risking step. And then from there, we would be looking to make a decision on whether we would advance into detailed engineering and whatnot, as well as the permitting to be able to have the project come online. And look, no decision has been made on this, but ultimately, what we're assessing now is the potential for it to be able to come into construction during Phoenix's life, so that those cash flows from Phoenix can fund the CapEx. Now, Griffin is an underground mine. It's not in the same geologic setting as Phoenix, and so the CapEx is more significant. It's more in the range of $800 million, which is easily funded by Phoenix cash flow, which is a great pairing for us. In operation, you're looking at around 7 to 9 million pounds a year and another 6 to 7 years of mine life. So really would be a significant extension for Wheeler River to be able to have Griffin come online subsequent to the startup of Phoenix.
So we discussed Phoenix, Griffin, and also McLean Lake mine. Now you also have a large portfolio of other exploration and development projects. Are there any assets in there that you would like to speak about, or any assets that you're working on this summer?
Yeah, absolutely. Our company has a long history, and so we do have an excellent portfolio of projects that we've built up. Maybe I'll call out a few things. Number one is our Midwest joint venture with Orano. This is a project located quite close to McLean Lake. We've been studying Midwest for both Sabre mining and ISR mining. We are nearing completion of a PEA for Midwest as an ISR mine, which would be the first public disclosure of economics for Midwest as an ISR mine. We're very optimistic about that. We've also been studying and advancing our work at Waterbury Lake, where we have the Teheldeth-Tway or THT deposit. And our partners there are also our largest shareholder in Denison, which is KHNP from South Korea. That project has the potential to be upgraded to a PFS this year. And then maybe just to round it out, going back to exploration, we have an excellent portfolio of what I call domestic exploration properties right in Denison. But we're very excited about our partnerships that we've put together, our collaborations with two more junior companies in our sector, where we've taken non-core Denison exploration properties and basically vended them in to a company called Foremost Clean Energy, which trades on the NASDAQ as FMST. They've got a portfolio of 10 projects where they are earning in up to 70%, and we own the residual of those projects, so let's say a 30% interest, but we're also Foremost's largest shareholder. Similar formula with a company called COSA Resources, trade on the TSXV as COSA. They've acquired 3 properties from us at 70%. We retain 30%, and we are COSA's largest shareholder. These are properties that we were unlikely to explore over the next 3 to 5 years, but that really deserve exploration. And by having Foremost and COSA work them, we're really trying to amplify our exposure to exploration success. Our focus is on projects, domestic exploration, again, is on projects that are closer to our core assets. So things around the Wheeler River corridor or closer to McLean Lake and Waterbury. But there is quite an exciting exploration story that's evolving in our company as well.
And David, the properties that Foremost and Corsa own, those are all uranium properties situated within the basin?
The projects that we've vended to them, all uranium. Both companies are focused on uranium Athabasca exploration. And, I think they've both got different attributes. COSA has a number of former Denison staff that are running the company, and Foremost is unique in that it's listed on the NASDAQ. And, DNN, our US ticker on the NYSE American, has incredible volumes. There's certainly a great cross-promotion potential with Foremost on the US market as well.
Geoff, I want to bring it back to you. We have a new Prime Minister in Canada, Mark Carney, and there's been a lot of talk recently of expediting the whole permitting process. Can you speak to this?
Yeah, sure. Well, it's one that's obviously evolving. We're encouraged by the initial indications that there is a desire to cut red tape, and there's certainly a degree of redundancy that happens between both the federal and provincial processes. So I think anything that can be done to streamline and avoid that duplication is going to be beneficial for the entire resource sector, especially those in the critical minerals like ourselves. How that ultimately plays out is obviously still to be determined. But I think importantly, as a multi-asset producer, whether there's imminent change that can affect Phoenix, given it's already well advanced during the permitting process, perhaps less so. But I think for the rest of the portfolio that slots in behind Phoenix, I think that's where the greater opportunity likely lies. But certainly as a low cost, imminent producer, and one that's expected to not only start construction, but also complete construction during the current term of the administration. We think this would be a great win to show that how the new government really can accelerate development in a responsible way.
David, as we wrap up, you have already provided a lot of detail on what investors can expect in terms of news flow in the coming months. But I think the big takeaway from our conversation is that Denison will be the next uranium producer in the Athabasca Basin, first with the JV with Orano, which is going to be sometime in 2025, followed by Denison's Phoenix project in 2028. Is there anything you would like to add?
No, Jimmy, I think that's a great summary, and maybe I would just take a minute to recognize all the hard work from our team in Saskatoon and Toronto and even in Elliott Lake to get us to this point. I mean, you of course would remember where we've come from in this sector. We went through many very challenging years, and because of the quality of our projects, we've been able to advance to a place where today we can confidently say we are very close to returning to production and becoming quite a meaningful producer again. And that didn't happen on its own. It happened owing to the hard work of a lot of people. So we're very grateful for the effort that people put in, and we're very grateful to be able to offer our investors such an exciting way to participate in the nuclear energy and the uranium sector.
Well said. And I think we can't forget about Saskatchewan being one of the best mining jurisdictions in the world.
We absolutely love doing business in Saskatchewan. We have incredible support from the province, and it also has provided us with many great employees and people who have been motivated to use what they call Saskatchewan ingenuity to move our projects forward. So we absolutely love the jurisdiction.
Well, David and Geoff, that was a great overview, and I want to thank you both very much for spending time with us today and giving us an update at Denison.
Thanks very much, Jimmy.